who is recording? Start the recording.
Recording started. Okay. Now you can start, Beno.
Okay, sir. Okay, sir. A very good evening to one and all. I welcome all of you on behalf of IAP Kerala and IAP Trivandrum to this wonderful academic series. And we have a wonderful topic for today, that is on the program of Synergy, Health, Wealth and Knowledge. But before I go to the introduction, I would like to call upon our beloved IAP Kerala State President, Dr. Joe Sir, to give the keynote address to Joe Sir.
Good evening, Dr. Beno. Respected Jayaraman Sir, the coordinator of this program. Today, the speaker, Balwant Jain Sir, and today, the chairperson, Dr. Ajit Menon, our state secretary, Dr. Krishna Mohan, and I think Dr. Beno and all the IAP Trivandrum team taken all initiative to organize the programs. As you know, our Synergy, the Wealth and Health project, we are started by wealth issues in regarding to investment, other policy regarding all the basics of investment already we have covered. This is the third program we are going to conduct. Today, another important webinar series regarding the home loan and the tax issues related to the programs. And today, the renowned expert in the field, our Vaswan Jain Sir, to discuss with all issues related to the home loan and the income tax issue related to the issue. We are going to have a good discussion on that. I think the other link, there will be a lot of delegates are joined for the program. And we are expecting all meeting, we are expecting more than 100 delegates from all over Kerala and all over India. This program also definitely there will be a good number of participants. They are waiting for joining the program. Definitely they will join. And I wish the program and Dr. Jayaraman, Dr. Narayan, and Dr. Menon, Ajit, taken all initiative to conduct the wealth and health issue in the webinar series for the beneficial of the pediatrician, practicing pediatrician, and all are beneficial with this talk on this regarding the wealth issues. And the Trivandrum, I take the opportunity to congratulate Trivandrum, Dr. Beno and Dr. Rumini Madam, taken all initiative to organize the program. And I wish you all the best program. Jai Hind, Jai Hind. Over to Dr. Beno for further proceedings.
I would like to call upon our IAP State Secretary, Dr. Krishna Mohan Sir, to speak a few words.
Thank you, Dr. Beno. At the outset, let me thank IAP Trivandrum for hosting this event, and also our team behind this thing, the Health, Wealth and Knowledge, led by Dr. Narayan Sir, Jayaraman Sir, and our Ajit Menon Sir. So today we have a very, very interesting session on home loans, and we have an excellent speaker for that also. So I wish all the very best to this program. With this, I invite Dr. Jayaraman Sir, the convener of this program, to say a few words also.
Respected President IAP, Dr. Jose, Trivandrum President, Dr. Rukmini, Dr. Beno, Dr. Shamohan, today's guest speaker, Dr. Balwant Jain, Ms. Balwant Jain, Dr. Ajit Menon, the chair. It gives me immense pleasure to address this gathering, and the fact that people are taking so much interest in our action plan on health, wealth, and well-being of the arranged for the well-being of the pediatricians all over Kerala. This is a program for the pediatricians we are doing, because most of us are not aware of the intricacies of the financial planning, as well as the importance of how to take a loan and when to take a loan, and which loan you have to take, and which are the bad loans and which are the good loans. So to explain this, we have got one of the most renowned speakers in India, Mr. Balwant Jain, and it's a pleasure to have him with us. And I'm very happy that he accepted my invitation to be with us today for this wonderful session. Thank you, Mr. Balwant. And I wish the program the very best. Thank you so much for this opportunity.
Thank you, sir. Before we proceed, can I ask our beloved IAP Trivandrum President, Dr. Rukmini K, to speak a few words? Rupani madam.
Good evening. Can you hear me?
There's a connection problem, madam, I think.
Yeah, there's some connection problem. All the best. All the best. There is some connection problem. Okay.
Okay, ma'am. Thank you, ma'am. So, thank all the beloved leaders. Okay, so we'll move on to the session, and I will give a small introduction. Let me give a small introduction about the speaker. Balwant Jain sir is a renowned tax and investment expert, and sir is a rank holder in Chartered Account and a company secretary of 1983 batch. Sir is a certified financial planner, and presently Jain sir freelances as an author, a television expert panelist, and a public speaker. And sir regularly appears on an expert on personal finance and personal tax on leading business TV channels like Z Business, etc. And sir has been answering tax and investment queries in newspapers, electronic media like Live Mint, Nav Bharat Times, Business Bhaskar, Money Times Today. And sir has been conducting workshops and webinars on taxation and personal finance for institutions and corporates alike. And sir has conducted many training workshops for qualified, certified financial planners through Financial Planning Standard Board of India on subjects of personal finance, investments, and taxation. Sir also delivers lectures on various professional forums on subjects of professional interest. We are very glad, sir, that you have come to this forum and accepted our invitation. Thank you, sir. And our chairperson for today is none other than our beloved Dr. Ajit Menon, sir. Sir is a senior consultant, pediatrician, and sir has been working in JJS Hospital for almost 20 years now, and sir is the current IAP Kannur president. Thank you, sir, for accepting the invitation and for chairing today's session. Now over to Ajit Menon, sir.
Thank you, Dr. Thank you, Dr. No. Respected IAP President Joseph, respected Trivandrum IAP Dr. Rogan, State Secretary Dr. Krishna, convener for the program, Dr. Jayaraman sir, our guest speaker, Mr. Balwant Jain sir, and all the beloved members of IAP family. Today, we are going for the third session of this President National, that is plan for our pediatricians, that is health, wealth, and knowledge. As a part of this series, we had two sessions. First session was on basics in investment by Dr. Thirumalai Kolandu. Second session was on mutual funds by Dr. Ajay Kumar from Hyderabad. Both the programs was well appreciated. And I would like to congratulate Joseph for taking this initiative. And we all know that these programs will definitely benefit our members. And in this series, this is the third series. Today we are going to have a sessions on home loans and income tax law. Actually, it looks very easy, but home loans, we know that this is a blessing for every home buyer, actually. So even with an average income, you can dream of a good luxury home by making it the tenure of a loan for a long term. So, but before going for a home loan, we have so many queries, actually, which loan to go. There are many nationalized banks, private banks, national housing banks, national financing banks actually providing loans. So in this field, which factors you have to consider, whether we should go for a fixed rate or a floating rate, what is base rate. So these are things actually in our busy practice, we won't consider things. We'll directly go and buy a loan. And we should think of whether there is any prepayment penalty on any of these loans. So to know this, we have got an eminent speaker today, Mr. Balwant Jain sir, whose introduction is already being given by Dr. Benno. I am a regular viewer of Balwant Jain sir on Z Business CNBC hours.
Thank you, sir. Thank you.
And it's really worth to hear you, sir. And the another session which sir is going to handle today is on income tax law. We know that these income tax laws are usually regularly means updated, and we are not versed with it. What is actually our income also we don't know. We always think that our salary is our income. Actually, there are many other things which we have to consider in cases of our income, and so we should always think that tax saving is always better than tax evasion. So tax evasion is definitely a crime, and actually tax evasion is more expensive than tax saving. So to tax save and to pay less tax, we should have a little bit of idea of what all things we have to take care of. So to talk on this, I would like to invite Mr. Balwan Jain sir to proceed, and it's an honor for me to be the chairperson of this wonderful session. And I thank the IAP Kerala and IAP Trivandrum for giving this opportunity. So thank you, and I will now I would like to invite Mr. Balwan Jain sir to proceed with the program.
Office bearers of IAP Kerala and Trivandrum and all other participants. Thank you very much for giving me this opportunity to share some of my knowledge. Before I proceed, let me clarify that today I'm going to speak on home loan and taxation around home loan, and we not on income tax per se. For income tax, if you office bearers agree, we can conduct a separate session on income tax laws applicable to doctors. So I will discuss about home loan.
I think I'll mute everyone, sir.
Is my slide visible?
Sir, can you?
Yes, visible.
Visible, sir. Balwan Jain, sir, can you unmute? I've just muted everyone. Okay.
I am
Okay,
unmuted. Am I audible now?
Yes, sir.
So what we will cover is, first I will cover about what are the income tax benefits around home loan, what are the peculiarities of income tax law related to tax benefit, and tax benefits available under the new tax regime as well as the old regime. Then I will discuss about how your home loan eligibility is determined, what are the different parameters which are taken into consideration while determining your overall eligibility. Then I will discuss about the tenure, how long a tenure you can get for a home loan, whether you should take a longer tenure or a shorter tenure. Then I will discuss about what are the rules around interest rates, how the interest rates are fixed, and then I'll take some FAQs around home loan. So under the income tax law, there are two different benefits which are available for home loan or for money borrowed for purchase, construction, repair of the house. So for purchase of a residential house, you get a deduction under section 80C up to 1,50,000 under the old tax regime. If you opt for new tax regime, you do not get this benefit. This benefit is available to individual as well as HUF, whether you are a resident Indian or non-resident, whether you are a citizen of India or not, you get the benefit under section 80C. This benefit is available only in respect of a residential house. Mind it. So if you buy a commercial property with the help of a home loan, you cannot claim benefit under section 80C. As far as the question of for how many houses you can take this, avail this benefit under section 80C, there are no restrictions as such as to the number of houses for which you can avail this home loan benefit, as long as your eligibility under Section 80C is restricted to 1,50,000 per year. You can avail this. There are, I get lots of query regarding that. I have already repaid one home loan fully. Can I go for another home loan and get the tax benefit? You can take this benefit as for as many houses and as number of times as you wish. This benefit of repayment of household home loan is available for regular EMI as well as if you make any extra payment. I understand the audience is aware about that your EMI comprises of two things. One component is interest and other component is a principal repayment. So the 80C benefit is available for repayment of principal amount. This benefit for repayment of home loan is not available as soon as you start repaying your home loan. The prerequisite for availability of home loan repayment is that you should have obtained the possession in case you have booked a flat, or if you have gone for a self construction, then the construction of the house should be complete. So the deduction is available in the year in which you get the possession. Even if you get the possession of 31st March, you can claim the deduction for a repayment made during the entire year. For availing this home loan repayment benefit, one more condition is required, that the home loan should have been taken from specified institutions like bank, as a housing finance company, university, your public limited company, employer, local bodies. There are specified bodies from which, if you have taken home loan, you can claim this benefit. In case there is a provision under the income tax law which provides for reversal of the tax benefit claimed under Section 80C in earlier years, if you sell the house, residential house, within 5 years from the end of the year in which it was acquired. So if you sell or transfer the house before completion of 5 years, the benefit claimed in respect of repayment in earlier year is treated as your income in the year in which you transfer the house. Please note that there is no such provision for reversal of interest benefit which you can claim under Section 24B. The second benefit which is available in respect of home loan, or I would rather say money borrowed for construction, purchase or repair of house, is available under Section 24B. Unlike the deduction for 80C, which is available for residential property only, this deduction for interest payment is available for all type of property, whether it is commercial or it is a residential. The year from which you get you are eligible to claim the deduction is only from the year in which you get the possession. This deduction is available for purchase of new house, construction of new house, or even repair or renovation of your existing property. This is available, as I said, that it is for a home loan repayment, the money should have been borrowed from specified institutions. But in case of interest deduction under 24B, you can claim the deduction even for the loan money borrowed from your friends and relatives, or even if you have taken personal loan, provided you are able to establish the linkage between the money borrowed and its actual usage. The deduction, as you get the deduction for interest payment after from the year in which the construction is completed or possession is taken, the interest which you pay prior to the year of possession or completion is called a pre-EMI interest and which is available in 5 equal installments beginning from the year in which you get the possession or complete the construction. But the overall deduction is restricted to 2 lakh in case of a residential house property, and in case of a let out property you can claim full deduction, but the loss under the house property income cannot be set off more than 2 lakh against the other income under the old tax regime. And in case any loss under the house property income remains unabsorbed, it has to be carried forward for set off in subsequent year against your house property income. So since the tax benefit in respect of pre-EMI interest, that is the interest paid prior to getting the possession, is available for 5 years, starting from the year in which you get the possession. So if you sell the property before completion of 5 years, you lose the claim in respect of the remaining years. The deduction under section 24B is available in respect of only 2 self-occupied property. So in case you have more than 2 properties and which are occupied by you yourself, then you have to make a choice of 2 houses which will be treated as a self-occupied property, and the remaining properties, even if self-occupied properties, are treated as if those properties have been let out, and you have to offer notional rent in respect of those excess property over 2 properties, even if you have not received any rent in actually. The house should be completed within 5 years from the end of the year in which the money is borrowed, to be able to claim deduction of 2 lakh for a self-occupied property. If the construction does not get completed, even if the builder delays the possession, then your deduction in respect of self-occupied house property comes down to 30,000. And whether you have one self-occupied house property or 2 self-occupied property, the aggregate deduction in respect of interest is restricted to 2 lakhs only. In respect of let out property, you can claim this interest for any number of properties. As I said earlier, the deduction for full interest is available, and when you compute the taxable income under the house property, in case you own more than one property, and some are self-occupied, some are let out, the overall interest loss under the house property income, which you can set off against other income, your business income, your capital gain or salary, is restricted to 2 lakhs. And beyond 2 lakhs, the loss has to be carried forward. As I said earlier, if you sell the house property within 5 years, the tax benefits availed under section 80C are reversed, but no similar provision is there in respect of section 24B benefit. So even if you sell the property before 5 years, the interest already claimed does not get reversed. Due to the changes in the interest rates, people resort to transfer of their home loan from one lender to another lender. As per the income tax law, when you transfer your first loan to a second lender, you can avail the tax benefit of 24B in respect of the second loan also. But no benefit is available if you transfer the second loan to a third lender, but the income tax department does not have any mechanism to check it whether it is the third loan or second loan. The deduction is available in respect of interest. but the processing fee which you paid to the lender for processing your loan application or even processing the loan transfer facility is also treated as interest under the income tax law, and you can claim full deduction of a processing fee within the overall limit of 2 lakh for self-occupied property and without any limit for a let-out property. The question arises in case of a self-occupied property or even in case of let-out property where the deduction is restricted. Can you claim part of interest paid as your cost of acquisition at the time of sale of the property for the purpose of computation of capital gain? The income tax law has amended this provision in last budget, providing for that in case you have already claimed any interest under the income tax law, any provision of the income tax law, you cannot treat that as the same interest as cost of acquisition. So by this amendment, one can infer that in case you have not been able to claim the interest under the income tax law, the unclaimed interest can be added to the cost of your house for the purpose of calculation of capital gain. The tax benefits which are available are, as I discussed, under the old tax regime. Under the new tax regime, you cannot claim the deduction under section 80C. No deduction is allowable for interest of 2 lakh for self-occupied property, restricted to 2 properties taken together. In respect of let-out property, you can claim interest only to the extent of a taxable rent, and in case the let-out property interest claim results into any loss, you are not allowed to set up that loss against other income, which is available up to 2 lakh in case of old tax regime. There is a lot of confusion amongst the borrowers about how to claim the joint home loan, because in some cases the property is taken in one name, whereas the other persons are made to join as co-applicant for a home loan, and in fact they actually service also home loan. So there is a lot of confusion about how to claim tax benefit in respect of joint home loan. So for claiming tax benefit in respect of home loan, the basic condition is that you should be owner or co-owner of the property. You should also be a co-borrower to the loan, and you should actually be servicing the home loan. So if all these 3 conditions are satisfied, then only you can claim the tax benefit in respect of home loan. The ratio in which you can claim the tax benefit of home loan need not be the same as the your share in the ownership. It may happen that one of the joint owner may fund his or her contribution out of her own fund, and the other co-owners may fund the home loan from may fund the house from taking a home loan. So your share in the your ratio will depend on your share in the home loan and not share in the property. So the tax benefit will be available in the ratio in which you are servicing the home loan, and the ratio once fixed at the time of buying the property cannot be changed as per your wish, because your share in the ownership gets determined fixed at the time of purchase of the property on the basis of how it has been funded by each of the joint co-owner. All the joint co-owners are treated as a separate owner of the property, and each one can claim up to 1,50,000 in under section 80C and up to 2 lakhs for a self-occupied property under the for interest payment individually. So if this is the one benefit of going for a joint home loan, so as to ensure that each one of the joint owner gets the tax benefit. So this was all about tax benefit. income tax law around a home loan. So before we go for making an application for home loan, you should do some homework, preliminary preparatory work, so as to ensure that you are not disappointed at the time of actually applying the loan, when the lender may altogether refuse you the loan or may sanction you a lower amount than what you need. So first and foremost importance is that first you should get your credit report, which is now available free of cost 4 times in a year from any bureau. So on the base, once you get your credit report, go through the entries in the credit report. It may happen that some wrong entry is reported in your credit report, which may vitiate your credit history or credit score. So you should in advance get a credit report, scrutinize the report, and if there are any incorrect entries appearing in the credit report, go for a rectification of those wrong entries. Otherwise, your credit eligibility gets affected. If you get a better credit score, then the lenders normally offer you a better rate of interest. 750 is the base score, which is considered by the lenders as a satisfactory score for your eligibility. So, and moreover, this credit report, when the lender initiates the process to evaluate your eligibility, the credit score is the starting point. So it is a prima it fixes your primarily eligibility, whether you are eligible for the home loan or not. Even if you are based on your credit report, if you are treated as ineligible, you can still go and explain to the lender the reason behind bad score and your current position. But if you have got a good credit score, it is a gate pass through which you enter for your eligibility to take home loan. What are the documents you need for taking home loan? For salaried people, it is very simple. Your form number 16 and basic KYC, like your home address, PAN card, Aadhaar card, etc. will do. Passport copy will also do. If you are a self-employed, like all the persons in the audience who are doctors, practicing doctors, you need to get your profit and loss account duly certified by your chartered accountant. So what happens if you do not have any documents to prove your income? Are you disentitled to get a home loan? No, it is not so. If you are able to establish your income, I'm getting some disturbances. So if you do not have any income proof, but if you are still able to establish your income through your bank statement, bank passbook, or actual investments made, you can still be treated for a home loan. For those who want to go for home loan, I would advise you to go for a pre-approved loan based on your income. Even if you have not identified your property, you can get a sanction letter, a prima facie sanction letter based on your income, so that at least you know how much money I can get as a home loan, and accordingly take your decision to the budget under which you have to buy the property. Now let us see how your home loan eligibility is decided or determined. Generally, as a thumb rule, the lender treats that your 40% of your net take home income is available for servicing the home loan, and based on your 40% of the income, the lender decide your eligibility. Normally, it is 5 to 6 times of your annual income. Moreover, your eligibility may get affected if you do not have consistency of income based on your income record. Normally, the home loan is available for the salaried people till the home loan tenure, means the home loan should get fully repaid by the time you reach the age of 60, which is applicable for salaried people, and for self-employed, the age up to, and when the home loan should be fully repaid is 65. If in case you are already running a loan, whether it is a personal loan or a vehicle loan, that eligibility for home loan gets impacted due to your running loan EMI of personal loan or vehicle loan. So in case your running loan EMI running loan has only very small period left, like 1 year, 1.5 years, it is advisable to fully prepay that existing loan so as to enhance your home loan eligibility. Value of the property and age of the property also affects the your home loan eligibility, as the lender normally give you 80% of the value of the property as loan. Even if you are based on your income, you are eligible for a higher amount, but the lender will restrict it home loan to the 80% of the value of the property. And mind it, the value as per agreement is not considered by the bank. Bank normally appoints its valuer to independently value the property, and the lender will give 80%. In normal cases, the valuation arrived at by the valuer of a bank is lower than the agreement value. The people think that the home loan is available for only new building or new constructed property, which is not the case. You can get a home loan for your old property also. Even one can get a home loan for a property which is 20 years, 30 years old, provided the residual life of the property is at least equal to the tenure which you want for the home loan. So if in case the residual life of the property is not 20 years, then your home loan eligibility also gets curtailed, because your ability to pay EMI per month is fixed. So if the residual life is less than 20 years, you will get a lower home loan amount. For salaried person, he does not have any chance to save tax or evade tax. So for a salaried person, the income reported in Form 16 is only considered. But in case of self-employed, the lender even take into account depreciation and give a higher percentage of the gross receipts, because the lender knows that the self-employed normally do not declare their full income, and will be able to service higher EMI in future. As I discussed earlier, the retirement age for professional is 65 as against 60 years for a salaried person. How to enhance your home loan eligibility? Because the lender is based on your income criteria. Lender may not be willing to give you the required home loan amount. So there are a few ways through which you can enhance your home loan eligibility. First, and which is normally resorted to by borrower, is that to make eligible family members as a co-applicant. So you can add your spouse, your parents, your children to your home loan application. So even if the property is not purchased jointly, your family members can still join you as a co-borrower, and the lender will take into account income of the eligible family member. So the income is pooled of the eligible family members who have applied for as a co-borrower, and your home loan eligibility goes up accordingly. As I explained, the co-borrower need not be a co-owner of the property, but the co-borrower has a liability to service the home loan in case the owner of the property is not able to service it properly. The second way is to enhance your eligibility, as I explained, is to fully repay your existing loans so that your higher EMI can be considered. And the third is that normally the tenure of home loan is 20 years. This is the standard tenure. But if you are just 30 years, 35 years, and you have a long time period for earning, you can opt for a longer tenure. There are banks which give you loan even for 30 years tenure. So by extending your home loan tenure, you can enhance your eligibility. What are the factors which affect your tenure? First is your age. So suppose you are 30 years of age, you can get a 30 years loan. But if you are 55 years of age and salaried, the lender will not give you more than 5 years of tenure for your home loan. Likewise, I explained that the age of the property is also taken into account while determining tenure of the home loan. So the tenure of home loan cannot extend beyond the balance residual life of the property. For a professional, since they work even after 60, so a longer tenure is available unless for self-employed people. How the interest rate which is charged to you is decided. So as I said, better the credit score, lower the interest rate offered by the lender. So your credit is, if your credit score is good, you get a better interest rate. Or if your credit score is not good, that means the lender is taking some extra risk, and for which the lender will charge you some higher interest rate. Your nature of employment is also considered. If you are working in a very reputed listed company, then you get a better rate than a small employer which is not a listed company or even a partnership firm, etc. Fixed rate loan are normally priced higher than a floating rate because the lender takes a risk of offering you a lower rate in case the interest rates go up in future. The lenders normally charge you presently interest based on the externally linked rate, but the interest rates have a past history of from prime lending rate to they have come to external linked lending rate. So earlier the lenders used to charge based on PLR, prime lending rate. So the prime lending rate is a rate which is the maximum rate beyond which the lender would not charge. Even the housing finance company still charge based on the prime lending rate. Then RBI suggested a base rate, because under the prime lending rate, the customer would not know whether I am being offered the best rate or not, because the PLR, the home loan interest rate was either proper PLR or a certain percentage of discount to PLR. So in order to bring transparency in interest rate regime, the RBI came out with a base rate. The base rate is a rate below which the lender cannot lend even to the best of their customer. Base rate also did not work well. So the RBI came with a marginal cost of lending rate. So the bank used to lend the borrower based on what was their marginal cost for marginal cost of their fund. And presently the regime is externally linked lending rate. Normally it is the repo rate which is announced by RBI from time to time, and the lender has to link a certain percentage over the repo rate. Nowadays only a few lenders give you fixed rate home loan, and mostly significant number of home loans are given under the floating rate regime. Under the floating rate in externally linked lending rate regime, normally the reset happens after every 6 months. It is not that the RBI has announced a repo rate change and your home loan rate will change from tomorrow. So it is a 6 months interval at which the lender has to review and align the lending rate with the external linked lending rate. In case you want to book a property under construction, then the bank ensures or bank prefers lending when the project is approved by some other lenders, because they want to ensure that there is no issue as regarded title of the property. So in case you are going for a home loan for under construction property, you should go for a project which is approved by at least a few banks. For an under construction property loan, the lender disburses the money in tranches based on the stages of completion. But before the bank starts contributing from its side, you have to put in your full margin money, which is normally 20%. 20% is your share, and for 80% you can get a home loan. So first you have put in your 20%, and then the bank will start disbursing based on the progress of the project. Many developers offer you some concession if you get the home loan fully paid. But I would advise you to opt for a construction linked payment, so that your exposure to the developer is minimized. As long as the construction is going on, the lender will charge you a pre-EMI interest. Your proper EMI does not start till the full disbursement has happened. So after the full disbursement has happened, your regular EMI will start, even if the project construction is not complete. So the starting date for your EMI is not always dependent on completion of the construction. Tax benefits, even if you have availed under construction home loan, the tax benefit will start only from the year of the possession. What if the builder defaults, like happened in the NCR, where the persons who had booked their flats could not get the possession for years altogether? So in such a situation, you still have to service the home loan. So your liability does not change whether the builder gives you possession in time or not. Your liability to the bank remains the same. And even if you do not get the possession, you have to service the home loan as per the terms and conditions agreed. These are some FAQs around home loan. Before I go to this FAQ, let me first tell you when you should borrow. So for which loan is good loan? So for any loan to be a good loan, it has to satisfy the three conditions, 3A's. 3A. First is that it should add to your capital, add to your assets. So home loan adds to your asset. This is a good loan. If you take a vehicle loan or loan for holidays, it does not add to your assets unless you use the vehicle for your earning income. Likewise, the holiday loan, etc., are bad because they do not create any asset. The second A is it should add to your income. So if any loan which adds to your income, suppose you take education loan for higher education, or take a loan for buying a clinic, etc., or you buy a vehicle for you buy an ambulance for your hospital, it will add to your income. So it is also good loan. And third A is appropriate. The loan which you take should be appropriate to your income and your social status. So you should not take personal loan to spend on your marriage, which is not in line with your income. So you have to satisfy these 3 A's before you go for any loan. Now let us take FAQs on home loan. What is home loan overdraft account and who should take it? So lenders give you the home loan in 2 ways. First is that they disburse you the entire money and your EMI starts. The second facility which is offered by lenders is that they give you a overdraft account up to which you can withdraw for your purposes, and every month your eligibility overdraft amount gets reduced by the amount of EMI payable for the month. So in overdraft account, what is beneficial for you is that you can put the extra money which is available for you for a certain period, for limited period, and to that extent your interest cost will come down. If you have extra money and if you repay the regular home loan, then you do not get the money back for your own use. But in case of overdraft account, you can put your surplus money and withdraw that surplus money within the overall limit of your reducing overdraft facility. Though bank charges a little higher interest rate on overdraft home loan account than the regular home loan account, but for those people who have a irregular flow of income, this works very good, very well. It helps them even out their flow as well as minimize their overall interest. The second question which is asked is, can I get a home loan for purchase of a plot? Normally the lenders are not comfortable giving loan for a pure purchase of a plot. But in case you intend to construct a house on that plot, then you can get a home loan for a purchase of a plot, provided you commence the construction on the plot within the reasonable time, so that you can get the better rates offered by home loan. If you fail to commence construction within the time stipulated, then the bank will start charging you higher interest rate. How many home loans can I take at a time? There is no limit either under the RBI regulations or under the income tax laws, as long as your income justifies that servicing of those many home loans. How home loan works in case of self-construction? If you want to self-construct a house, there is a defined process normally by the lender. So the lender will ask you for submission of project proper cost estimate, etc. But mind it, all the lenders are not comfortable in giving a home loan for self-construction for the obvious reasons So your options are limited. The lender will give you home loan for the cost of the plot and construction cost together, which is called a composite loan. The disbursement of the home loan will depend on the progress of the construction. So they may accept the certificate given by the civil engineer or architect appointed by you, or they may depute their own employee to verify the stage of progress of construction of complete interest. The pre-EMI and the full EMI, the pre-EMI till the full money is disbursed, and the full EMI starts once the entire loan is disbursed. What is a top-up loan, and do I get tax benefit for the top-up loan? So top-up loan is a facility which is offered by your existing lender when you have already serviced your home loan to some extent, and the proper price of value of your property has gone up. So if the difference between your existing balance in the home loan and your eligibility based on your enhanced income as well as the enhanced value of the property, is a top-up loan which you can get from your lender. So but the tax benefit in respect of top-up loan may or may not be available depending on the purpose for which you have you have put this top-up loan. So in case you have used the top-up loan for a marriage of your children, then you will not be able to claim. But if you have used the top-up loan for repair of your existing property, then you will be able to get the deduction under 24B. Should I buy an insurance for home loan? Normally, all the lenders insist that you buy an insurance policy to cover your home loan. As a financial planner or financial advisor, I would advise all the borrowers to buy an insurance policy, and that too only term plan, so as to ensure that your legal heirs only inherit the property, the house, and not the loan. So even if something happens to you, the outstanding home loan gets paid from the proceeds of the insurance policy linked with the home loan. While buying the home insurance policy, never opt for the single premium, because in most of the cases, people prepay their home loan. Their home loan does not run the full term. So the premium paid in respect of the balance period gets lost. So you should buy a term plan with an annual premium. So once the home loan is paid fully, you can stop paying the premium for the term plan. Can I transfer my home loan from one lender to another? Yes, you can transfer your home loan from one lender to another lender who is offering you better terms conditions. For doing this, you have to ask your existing lender to give you a certificate mentioning what is the amount outstanding as on a future date, on payment of which they will release the property document. You can take that letter to the prospective lender, and then based on this letter, the second lender will repay pay the money to the first lender and hand over the property documents to the second lender. Can I save capital gains tax on property by repaying home loan? So in case you have sold the property, so under the income tax law, for long-term capital gains, you can save capital gains by either buying a residential house or by investing in capital gains bonds. A few people feel that if I repay the home loan, I should get the benefit of a capital gains exemption, which is not the case. So there is no tax benefit in respect of a repayment of home loan for capital gain. However, you can claim the tax benefit in respect of under section 80C for repayment of your home loan within the overall limit of 1,50,000. Can I claim HRA and home loan benefit simultaneously? Yes, as long as you are satisfying both the conditions. For claiming HRA, you have to be staying in a rented house which is not owned by you, and you are actually paying the rent. So it may happen that you have bought a house in your native place and your actual vocation place is different, where you are paying a rent. So in such a case, you can claim the HRA and home loan benefits together. Do I get home loan for a old building? This I have already discussed based on the technical evaluation made by engineer appointed by the bank. For the residual period of building, you can get a home loan. Should you prepay home loan? This is very tricky question. More than economical, it is a psychological or sentimental question. So we Indian are conditioned in such a way that we do not want any debt on our head. So there are people who prepay the home loan as long as they have a spare fund. But financially speaking, since the home loan is available at a lower rate, though the rates have gone up very recently, but the difference between the rate which you pay on your home loan and the return which you get on equity mutual funds in the long run is higher. The difference is at least 3-4%. So the return which equity gives you is more than the interest which you pay on your home loan. So it makes sense for you to invest the spare money in equity mutual fund rather than prepaying your home loan. Home loan for purchase of property from close relatives. So normally the banks treat or look such transaction with suspicion as to carried out for the purpose of raising resources and not as a genuine transaction. So there are possibilities that in case you are buying a property from your close relative, the bank may use magnifying glass to understand and appreciate the transaction. And in case it is a genuine transaction, you can get a home loan for buying even property from your relative. So bank or housing finance company. So banks are better regulated. The interest rates are required to be reset every 6 months under the floating rate. The housing finance companies are not so quick when the interest rates go down, but they are quicker for raising the interest rate when the interest rates go up, and which must have many of the borrowers must have realized in recent past when the interest rates have gone up very fast. But then why do people go to housing finance company and not to banks? Because the banks normally have a tighter, stricter criteria for eligibility. So in case there is some problem or defect in the title or something which is not right in the property, or your proper credit profile is not proper, then HFC, housing finance companies, give you home loan, but they charge you higher rate of interest. So in case you are not able to get home loan from bank, you have no option but to go to a housing finance company. But given a choice, you should go for a bank as a lender. What happens if I am not able to service the home loan? If you are not able to service the home loan, the lender can take possession of your property and sell it off and pay you if anything remains after adjusting their loan. And in case the money, the home loan cannot entirely be set off, you still are liable to pay the difference outstanding. What happens in case death of a borrower? In case of death of the borrower, the home loan strictly comes to an end, the legal heirs are supposed to repay the home loan fully unless the bank agrees to shift the loan to the legal heir based on their income criteria. There are two types of loans which lenders give. One is the proper home loan, another is a loan against property. So the home loan for home loan, it is available up to 80% of the value as against the loan against property. The lenders normally give you 60%. Tax benefits are also available for home loan, whereas for a loan against property, the tax benefit will depend on the ultimate use of the money raised. Interest rate charged on the home loan is lower than the interest rate which you have to pay for loan against property. That's it. Any question? So viewers can send me email on this address in case they have any question on related with personal finance, personal tax. They can use this phone number also to send me any WhatsApp message of query, but request all the members not to make a call on this number.
Thank you, Mr. Balwan Jain sir, for this extensive view which you have given, an insight which you have given in the home loan section. And we are all pleased to have you today. And you had almost cleared all the queries related to home loan. But I'm sure some of the questions might come from our members. Now the topic is open for discussion. Jayaraman sir.
Thank you, Dr. Balwant. Thank you, Mr. Balwant, for this wonderful session. After the FAQs, I think I have exhausted all queries. You have dealt with all aspects of home loan, so that it is really a textbook on home loan. Thank you so much for this presentation.
Sir, I have a doubt. Suppose the home loan which you have taken is at a fixed rate.
Yes.
And we change it to a floating rate.
Okay.
And then after few years, if we want to change the lender.
Okay.
So in that situation, will there be any prepayment penalty in such case?
So normally for the floating rate regime, the RBI has given instructions to the bank that as long as it is a floating rate interest, the banks cannot charge any prepayment penalty.
But first, when we started our loan, we started as a fixed interest rate.
No, but presently it is running under floating.
Okay, sir.
So you are repaying a floating rate loan. You must have repaid some prepayment penalty for a fixed loan when you convert it from fixed to floating rate.
Yes, sir.
Yes.
Okay.
I think there are some queries in the chat box.
So one query is that which one you suggest, floating or fixed interest?
So presently, only a few lenders are giving you the fixed interest rate option. So the majority of the lenders are giving you a floating rate. But theoretically, if you want, you should go for a fixed rate when you think that the interest rate cycle has bottomed out. So the interest rates cannot go any down further. Then you should immediately go to the lender and ask him to shift you to the fixed rate. This is what I've done when I think in 2004 or 5, I'd taken a floating rate interest, floating rate 8 point something. And one of my friend advised me in those days I was not an expert on these things. So he advised me, Balwant, the rates have bottomed out and you go and ask for a shift to fixed rate. So I approached the lender and they for 7.25, they charge me 7.75 fixed rate and 1% as processing fee and I got my home loan converted to fixed rate, which ran till 2012. During which time, the interest rates had gone up to 11 and 12%, but my interest rate was 7.75. So you should go for a fixed rate when the interest rates are at the bottom. If you opt for a fixed rate when the interest rates are high, you will not get the benefit of reducing interest rates, because you will have to pay interest at the higher rate, which is fixed for you.
Sir, is the floating rate varies from customers to customer? Sometimes the same bank provides.
Yes. As I explained, this changes based on the property, nature of your employment, your credit profile, credit score, consistency of your income. वो हमारे हिंदी में बोलते हैं, नाक देख के तिलक लगाते हैं.
Okay.
I presume you understood it.
Yeah, I know, sir. I am born and brought up in North India, so I know very well.
Good. I hope I have been able to explain
Yes,
the
sir.
subject.
So definitely, I think the main gist is actually if you are borrowing a home loan, if the spouses are both working, then they should go opt for a joint home loan, so they can claim 1.5 lakh under Section 80C, and the 2 lakh interest rebate they can get. Both of them can get.
Yes, normally husband and wife buy property in joint name, so they should go for a joint home loan. It enhances their eligibility, plus it enhances their tax saving also, because both can claim this deduction.
Yes.
So I can read a question. If we have missed the tax saving by Section 24B, can we do it after 5 years of possession? No, you cannot. So the deduction for interest for pre-EMI is available for 5 years, beginning from the year in which you get the possession.
So one more thing, if we opt for a home loan less than 20 lakhs, can we get more than 80% of the total value of the property of the house construction? Okay. Or is the 80% is the fixed limit?
No, it is not fixed. For a higher loan amount, it is 75%. In some cases, even it can go up to 80%, but 80% is the standard followed by the lenders.
Okay.
I think we should conclude.
Yes, sir. If there are no more questions, Jayaraman sir, we can conclude it.
Yes, you conclude.
Yes, sir.
Dr.
Bennu is there.
Yes, sir. Sir, shall we, Jayaraman sir, shall we conclude, sir?
Yes, you go with the order. Thanks.
Okay, sir. Thank you, sir. So, that was a wonderful and an extensive session. And as Ajit Menon sir had rightly told in the beginning, that even though it seems very simple for us, most of the fewer details has to be actually gone or has to be explained by an expert. Only then it becomes very useful for us. So most of the topics were extensively and very lucidly covered by Balwant Jain sir, and it was chaired wonderfully by Ajit Menon sir. And I hope that most of the people who had actually attended the session had benefited from the talk that was given by Balwant Jain sir. And so I, first and foremost, I would like to thank Mr. Balwant Jain sir, sir is a certified financial planner and a renowned tax and investment expert. Thank you, sir, for the wonderful session. And my heartfelt gratitude towards Ajit Menon sir for chairing the session and for giving us an insight about the various aspects of the home loan and income tax laws. And there are variable outputs from Jayaraman sir, and sincere thanks to our IAP State President, Dr. Joseph, for giving us this opportunity for IAP Trivandrum for conducting this session, and various other senior dignitaries who were there in the session. I thank them all. And last but definitely not the least, I would like to thank all the patient audience for their contribution and for their patient listening. Thank you. Thank you all once again. Thank you, sir. We'll mic you.
Thank you.
Thank you.
Thank you. Thank you, Balwanjan sir.
Thank you, everybody.
Namaskar.
Yes, sir.